Hello, traders. Happy New Year once again. Today, I'm going to be sharing a very strong message so that even if you've been trading for so long, you will learn from this. All right. And if you are a beginner, please adhere to what I'm about to dish out. All right, so that you won't make mistakes like others. All right, in a forex market, mistake is very, very costly. All right, because you are toiling with your capital, and that is the reason why I titled this uh, lesson reason some traders lose money in forex market. All right, and you want to know the reason why forex traders lose money. Please just sit down, get a cup of coffee, take a pen and a paper, then jot some things down so that you can learn. It's very important. No matter who you are, no matter your level in trading, this is very, very important. All right. Number one on the list is that lack of knowledge and experience. All right. I want you guys to write all those things down. Lack of knowledge and experience. All right. If you don't have knowledge in forex as a forex trader, you will lose money because many traders enter the forex market without sufficient knowledge or experience. This is very, very bad. All right, you have to have experience and knowledge about trading. That is one point because understanding market dynamics, technical analysis, and economic indicators is crucial for making trading decisions. All right? Because you've got to understand market dynamics, which are the technical analysis, economic indicators, before you can make a trading decision. All right. So it's very, very important. Like I said, lack of knowledge and experience will make traders lose money. All right. Now, the second one is the emotional trading. All right. Most when I started trading, and let me use myself as an example. When there is difference between when you are using your demo account and a live account. I've already thought about that. When you are using your live account, that is your capital, that is your investment. All right. Any action or any step you take, all right, it's either you lose or you gain. So it's very, very dicey. And that is a situation where you see that emotions comes in. All right. And it's very, very normal for you to begin like that. But as you grow, you have to do away with emotions. You take trading to you tell yourself this is my business, so you don't have to bring emotions into it because emotions can cause damage, a very serious damage to your capital. Emotions like fear and greed can lead to impulsive decisions. That is what emotions does. It can lead to untimely decision. For example, when it's not when there is no setup yet, you just see yourself, you just want to trade. Your emotions is telling you getting, but you know that it is not time yet. All right, premature entry. Once you get into a trade prematurely, you will get stopped out, and you will now see that at the end of the day, the price action will now go to your direction, and it hurts so much. So we need to do away with emotions in tradings, because traders may hold on to losing positions too long out of hope, or to cut winning trades short out of fear, both of which can lead to losses. Let's say you are, like my mentor will say, we are fearful when we are winning, and we are now hopeful when we are losing. Why should you be hopeful when you are losing? Once you have done your analysis and you see that the trade is going against you, you cut your losses immediately. I, for one, I don't wait. I cut my losses. I just know there's something that I will see. I will just, okay, no, 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 it's a very wrong trade. Yes, if I had maybe place a buy trade and now discover that along the line it's coming down, it's a sell trade, that means at that point so many sellers stepped in to push the market down. There is nothing wrong with that. All you need to do, you cut your losses. And apart from that, that is why we have stop loss. If you don't know how to use stop loss, please immediately, I have already thought about that. Immediately you place your entry. The next thing you need to do is to place your stop loss, because stop loss will act as a gatekeeper. When the trade is going against you, it will cut it off. It will help you and cut your losses. That is what stop loss does. All right. Now, there's now the thing is, when you are winning, you see trade going to your direction. All right. Normally, you should have a target point. Because we'll say you take your target point. If you are bullish, the next support level usually supposed to be a turning point. All right, but when you see there's what we call trade management. When you now see that the momentum is high, all right, the support level or the resistance levels, I beg your pardon, the resistance level can break, meaning that the price will keep rising. So you allow your trade to run, even if you see a little pullback, it's normal. That is a period of rest. It's normal, and it will continue. So you don't when you are gaining, you don't just, because of fear, cut it. Allow it to run. And that is why strategy comes in. Once you have done your analysis and you trust your strategy before you can be confident on your own strategy, you must have back tested it. You must have learned from your mistakes. All right. You trust your strategy. Once you place your trade, put your TP, allow it to run. All right, you don't need to be fearful when you are gaining and be hopeful when you are losing. It's a very wrong mindset. When you are winning, you allow the trade to run to your TP. When you are losing, cut your losses. Don't be hopeful to think that price will turn. No. And most importantly, learn to use stop loss. It's very important. Learn to use stop loss. And the third one is poor risk management. Not using stop loss, like as I mentioned, is a very big risk. All right, you should know how to use your stop loss order. It's very important. And another, risking too much capital on a single trade or not having a clear risk management strategy can result in significant losses. You must have a clear and defined risk management strategy. All right, as a trader, it's very, very important. You don't need to risk too much. All right, in any trade you are about to take, you must have your own checklist. Any trade you want to get in, okay, I'm using this lot size. This is my lot size. That is what you should stick to that. Even if maybe later you want to scale up, but do it, make it as a normal routine. You don't just jump from this lot size to another lot size, from one lot size to another lot size. So, no, it will damage your capital. All right. So over leveraging is not good. You want to just get rich overnight on one trade. No, no. Compounding is what trading is all about. If you are doing business, you don't just make all the profit one day. You do maybe 6 months, 1 year, like that. Compounding. That is how you grow. Lack of trading plan. That is the fifth one. Lack of trading plan. Successful traders typically should have a trading plan, a well-defined trading plan that outlines your own strategy, risk tolerance, your goals. All right? This is what will make you profitable. But in the absence of that, it will land you to where what a poor decision making. All right, so you should have a trading plan. You must have a trading plan. As a matter of fact, before you get into any trade, you should know your trading plan. All right, know your trading plan. And if you don't have one, please leave a comment at the comment below. Then I will help you to get a trading plan. Like my mentees, the people that I teach, they all have trading plans. They have strategies, they stick to it. If there's no setup, there's no trade. If there is a setup and you see that there is a setup, A plus setup, sure setup, you don't need to hesitate. Once you get to that level where you need to get in without any hesitation. That is how it is. Another one is market volatility. In forex market, the high because forex market is highly volatile. An unexpected event or news can lead to rapid price movement. All right, that can catch traders off guard. Now, that is the reason why you have to use your stop loss order. All right, because of all this market volatility. Market is very volatile. If there's any news, if it triggers, you will see a very sharp go up or a sharp pull to the downside. So if you don't use your stop loss, it will drain your capital. So you need to use your stop loss. Once you place an entry, the next thing you should do is your stop loss. Don't forget it. Even if you don't use it, you don't even place your TP. If as far as you are there, you can exit anytime. But you see your stop loss order. It's just like you leaving your apartment without locking your door. So it's open. Anybody can just come open the door and get in. That is stop loss for you. So if they say a news event or a market sentiment, all right, you will see that is ISS. If there is a shift in market, you will see because of traders' sentiment, you will see a swift turn of event. And once that happens, you see a very sharp push to the downside or push to the upside. So if your stop loss is not there, it will drain your capital. And once your capital is drained, you are out of business. So you have to try and protect your capital. Ignoring economics indicators. All right, that is the seventh one. Forex Forex prices are influenced by economic indicators and geopolitical events. When you ignore these factors, this can lead to poor trading decisions. So don't ever ignore economic indicator. It's very, very important. All right. Another one is over trading. That is what most traders do. Don't overtrade. Tell yourself this year, 2025, I will not overtrade. Overtrading does not give you money. As a matter of fact, sometimes in a week, you might not even have a trade because if there's no setup, you don't need to force it. But once the setup comes, you will not hesitate to enter. That is being professional. That is being professional. All right, over trading is not good. Trading too frequently or with too many positions can lead to mistakes and increased transaction costs, which can erode your profit. You don't need to overtrade. Some people, you call yourself a day trader. Fine, it's a trader. You are a day trader. That does not mean you must trade every day. If you're a day trader, does not mean you are going to trade every day. No. Wait for a clean setup. Maybe once in a week if there is setup, or one trade in 2 weeks. Even some people take only one trade in a month, and that will give them one good profit. What are we talking about? So please don't overtrade. Every day, that does not mean today, because today is Monday, you must trade. No, trading is not that. It's not like that. Please. Like I've told, if you are following me, overtrading is not supposed to be your thing. Once you see an A plus setup, stick to it. Once you are in, you are in. It takes you straight to your take profit, no matter the time it will take. Please don't overtrade. Following crowd is another problem. Relying on popular opinion or following the crowd without conducting your own personal analysis, that will lead to poor trading decision. You don't follow crowd. Learn. As a matter of fact, I've told my mentee, after I've done my own analysis, because I usually drop a signal for them. But that does not mean that you should follow my signal. You should also do your own analysis, because I've taught you how to analyze market, how to analyze currency. Do your technical analysis, top-down analysis. Then you now compare. All right? That is how it should be. You stop following crowd because they are going south, you want to go south. Because say they are going this way, you want to go. No, you don't trade like that. If you want to be a professional trader, learn it. That is the reason why you get the education, get the experience. All right? Following crowd, please this year tell yourself we are not going to be following crowd, because it will take you it will make you take wrong decision. All right, there is no champion in this field. The more knowledge you get, the more back testing that you do makes you profitable. I tell you. Then technical errors, mistakes in executing trades, such as entering the wrong position size or direction direction, can also lead to losses. So for you to be losing money, that means sometimes you do your technical analysis, there is an error in it. So you always need to calm down anytime you are doing your top-down analysis. What do you need to look out for? The first, just open your chart, go to the higher time frame, know the direction of the trade. That is what the higher time frame does. You can use the monthly, the weekly, and the daily to know the direction of the trend, if it's going up or coming down. So after that, you scale down. Like me, I don't go below 1 hour. That is where I do my execution right now. I don't go below 1 hour. Please, thank you. I'm going to stop here because of time. If you have any comment, please drop it at the comment section. Thank you. God bless you. Please register and